Hey everyone, welcome to our Asset Management Friday segment of the Passive Income Through Multifamily Real Estate podcast. I'm your co-host Kyle Mitchell, also joined by Gary Lipsky. This segment is focused on educating operators, building better systems, and becoming a best-in-class operator. Since we're also live on Facebook right now, make sure to type in any questions you have in the comment section below. Also, be sure to check out our Facebook group, Passive Income Through Multifamily Real Estate. All right, today on the show is going to be me. Gary will be interviewing me on the topic of monthly reporting.
All right, Kyle. So tell the listeners a little bit more about yourself and what you currently do.
Yeah, thanks, Gary. And I am a co-founder with you of APT Capital Group, which will be launching here very soon, this week, in fact. And, we manage assets out in the Arizona market. So in Phoenix and Tucson, we purchase value add apartments out there. And, really our specialty is in the management and operations of these properties.
Excellent. So let's dive into monthly reporting. What's the process for reviewing the monthly reporting for property?
Yeah, for us, we've worked closely with our property management company to actually adjust the monthly reporting a little bit. But right now we see the monthly reports in a raw version on the first of the month. Our month closes on the 25th of every month. And we get emailed a monthly report on the first, and then we scrub through them and take a look if there are anything that doesn't look right, any adjustments, any reclasses from expenses to certain accounts, maybe to capital accounts, things like that. And then we send those changes back to the property management company, who then makes those changes and then sends us a final version by the 10th of the month so that we can report back to our investors for us by the 14th of the month.
What are the three common mistakes you typically find in that reporting?
Yeah, and I encourage everyone to really dig into these reports. Some people may just look at the summary report and maybe have a couple of questions, or just trust your property management company. As asset managers, you've got to dig in a little bit deeper and peel back the onion a bit. So, the three things that I see, we found charges that were supposed to be to a different property, actually. We had a $2,600 plumbing charge that I questioned, and when it came back from our accountant, it was charged to the wrong property. These property management companies sometimes manage hundreds of different properties, and so your business unit could get mixed up with another one on accident. Maybe it's a coding error. But that's one thing that I would encourage people to take a look at. Other things like double charges. When you have a property that has hundreds of charges a month, sometimes things get double accrued or double charged. And so that's where you need to go into the details of the monthly reporting and not just look at the summary report. If you're looking at the summary report, all you're looking at is the summary of a specific line item, like let's just say G&A or repairs and maintenance. But unless you're going into the general ledger and looking at all the charges, you're not going to be able to see any type of double charges. So, for example, things like a utility bill or simply something for repairs and maintenance, whether it be changing locks or cleaning carpet or whatever that is. We found several instances where there's been double charges. And then the last thing I would say is just coding to the wrong account. We like things to be in certain accounts so we can track trends. And if the property management company accidentally, charges something to turns versus repairs and maintenance or to contracted services, it's hard for us to then take a look back at the trends and see where those are going. And a lot of these things, people may be asking, well, why is your property management company making these mistakes? Well, I think when you're first working with a property management company, it's communicating with them on how you like to see the reports and changing them around and working with them to get things coded correctly. But these property management companies have a lot going on, and accountants are real people, and sometimes they have turnover. So when those things happen, I think that's when sometimes the reporting can get a little wonky. So it's important to really dig into these reports and take a look.
Yeah, that's great advice. What are two things sponsors typically forget about when underwriting a property as it pertains to accounting or, monthly reporting?
Yeah, I think when you talk about underwriting, you're doing all the standard things, whether it's, you're focusing on occupancy and what you're putting into each unit and the high level expenses. But they're small things, but two things that come to mind are things like taxes. Every year the property's got to file taxes, and those come with an expense. And I think a lot of times that's not accounted for or planned for. And the other thing I would say is lender charges, additional charges from the lender. Whether they have holdbacks, they have charges when you're submitting to get your reserves back. And they also have yearly charges for taxes as well. These are things that you may be able to get waived depending on your relationship with your lender, but it's important to know that these are charges that are going to come and hit your P&L and hit your budget, and you've got to plan for them.
Absolutely. What does banking look like when you have a property? Who has access? What are the accounts you have?
Yeah, we've got a couple different accounts. Number one, we've got a working account that we have access with our property management company, and that's our checking account. One thing that we've learned from other past interviews is making sure that although your property management company controls that account, that you're a signer on that account. If you happen to have to move over to a new property management company, you want to be able to access your funds immediately. There's been situations in the past that we've heard where they're not a signer on that account, and they have to wait 4 to 6 months until that funds are released. So we also have 2 other accounts that we set up on our own, and that's where we manage most of our money. So we do not transfer over our entire CapEx budget over to the property management company to control, because of what I was just saying. The property management company is going to hold back some cash because there are bills still coming in if you're switching over. So we have our own account, and for the bulk of the money, we put it into a savings account. It's not much, but you're still accruing on the interest on that by putting it into a savings account. So when you have $1 million or several hundreds of thousands of dollars, that can add up. And then we have a checking account that we manage as well.
So we ask this of every guest, and now it's your turn to answer this question, Kyle. What is your asset management superpower?
Yeah, I think it's attention to detail, and I think it's one of those things that it's been from birth for me. I love the details. The devil is in the details, and whether it's how things are formatted or how things look, if things are a little crooked, it catches my eye, and it really bothers me. So I would say attention to detail for sure.
Well, I can attest to that. I really appreciate your attention and detail. So thank you for sharing your expertise today and adding value on the subject of monthly reporting. In summary, we talked about digging deeper into the reporting, tax expensing in your budget, because I don't see anyone doing that, and being on a signer on your bank account. So critical, so critical. So please tell the listeners where they can find a little bit more about you, Kyle.
Yeah, absolutely. So we've got our new website launching this week, which is aptcapitalgroup.com. If you can check that out, we've got a free passive investors guide for people to check out to learn more about syndication. And then I'd also encourage people to check out our YouTube channel, which is youtube.com/aptcapitalgroup.com. We're starting to do some new things, some educational content on that YouTube channel. So check us out there.
Excellent. I can't wait for people to start finding us on social media on our new channel. To all of our listeners, thanks for listening in. And if you like our episode, please head over to iTunes or Stitcher and subscribe, and review this podcast, as it will help us grow our audience and reach more people. We will talk to you next week.
Hey, everyone. Thanks again for tuning in. We really appreciate your support. If you're interested in learning more about APT Capital Group and speaking to someone on our team, click on the link and schedule a call with us. We're here to help, and we'd be excited to speak with you and get to know more about you and your goals. Talk to you soon.